It's our first look at second quarter GDP. It has a 2 handle. That's a good thing. 2.1 to be exact. Definitely better than most expectations I was viewing, and indeed follows sequentially 3.1. Let's go through some of the internals, shall we? Now, that's, of course, quarter over quarter. If we look at the consumption rate, 4.3, also well above the estimates, high estimates of 4%, sequentially blows away rearview mirror at 1.1. The price index, also a little hotter than expected. Hey, anybody at the Fed watching these numbers? 2.4 following 1.1 there as well. And that 1.1, both on consumption and the pricing index, were actually upgraded from 9/10. And finally, a personal consumption expenditure, the core, quarter over quarter, kind of a Fed favorite here, 1.8. So that missed the 2% that we were expecting, sequentially following up 1.1. Listen, we're always supposed to look at this as an averaging, and many, including our own Steve Liesman, has done research saying the first quarter usually has some anomalies. I think we shared those a bit more with the second, plus uncertainty, but pretty good numbers. It's evidenced by yields upticking. We just ticked off 210. Remember, we were in the 190s just a couple of weeks ago, and the short end getting close to 190, and that's, of course, 2s, 3s, and 5s. Dollar index getting very close to some of the best levels we've seen since about the third quarter of last year. Becky, back to you.
Rick, stay right there. Steve is here. He's looking through the numbers, too. And, Steve, your takeaway on this.
Rick was absolutely correct to flag the consumption number, which is up 4.3. We were looking for 4%. It's nice that we held on to Q1. I'm trying to see if there's a bit of the reversal. Okay, so structure's down 10%. Equipment also kind of flattish at 0.7. And the intellectual property number about half. So you did have the capital spending slowdown, both on the equipment side and the IP side, that the Fed is worried about. It's not disastrous. You had exports reverse themselves in a very strong way, down 5% versus up 4%, and imports were up 0.1%. Government, very strong federal spending. And we talked about this. I said this was the reason why people had some of the strength of 19 wrong, which is because they just didn't understand how the government spends money. They had all this money allocated in 18, and they had it spent in 18. No, it comes over. So you have a 7.9. I've got to go back in a very long way here, and I'll do that in a minute, to find out when you've had a 7.9% quarter-on-quarter annual increase in federal spending, plus a 3.2% increase in state and local spending. So that's going to be a piece of it. And in a second, I'll tell you what the contribution to GDP is. But here we have a reversal of the first quarter, which is what we expected. And I think the way to think about this is you take your 3.1, you take your 2.1, you average them together, and you got about a 2.5% economy, which is still running a half a point or more above potential. And this concern and craze about this slowdown that everybody was crazy about, I just think at the moment looks misplaced.